Gold right now is trading back at $2,210 per ounce. We've now seen platinum break back above $910 per ounce. Palladium has reclaimed $1,000 per ounce. We've also seen crude oil prices break back towards $83 per barrel. So at the start of this week, we took the opportunity on platinum to lock in 510 points profit just from positions we entered into last week, back down towards 890 up towards $899 per ounce. At the start of the week, platinum prices, they broke out to $925 per ounce. So just in less than 1 week, a nice clean 510 points profit banked, which, as you know, every 1 lot contract that you would be trading at, that's going to net you over $5,000 of profit. Every 10 lot contract you'd be trading, that's $50,000 of profit. Now, that was a very straightforward opportunity for you to capitalize on that we telegraphed to you last week with platinum. Now, this week, in fact, on palladium, we've reloaded just yesterday on Wednesday back at $985 per ounce. Already, palladium is breaking back above $1,000 per ounce. I hope you managed to sniper in and scoop up some additional massive bargains over the course of this week, particularly on platinum and palladium. Now, of course, with gold breaking out above $2,210 per ounce at the moment, what next for the precious metals? We've got Citigroup that are now forecasting $3,000 per ounce gold for this year. We've seen Goldman Sachs, JP Morgan, Bank of America all increase their price targets to $2,300 per ounce. We're not that far away from that at the moment. Only another $90 breakout to the upside for gold, and we're going to essentially be at $2,300 per ounce. It's been a record-breaking streak here for gold over the month of March. So we've essentially broken out to all-time highs, not once, not twice, but 3 times over this month. And we look like we're on the verge of now doing that again before we head into the next quarter, into Q2 April next week, which historically supercharges commodities anyway with the fresh capital inflows that you get as we transition into a new month, a new quarter, and also a new tax year as well. So ultimately, we are positioned here in the portfolio for much higher prices across the metals and also the energies here as well. Everything that we've continued to telegraph to you and talk you through on the commodity reports here. So again, just going back to Monday's report, overall the game plan has been here. If we do start to see further acceleration to the upside, particularly for gold here, the game plan is to continue to scale out on strength here. The next levels, of course, that I'm looking at would be a breakout above the all-time record highs, which currently reside at $2,222 per ounce. We may even do that here as we go into the end of the session on Thursday. Be aware that as we go into Friday, it is, of course, public holiday, so markets will be closed. However, we still have Jerome Powell speaking on Friday, and we have PCE inflation data, which is the Fed's preferred measure of inflation. What you can expect from that is there to be a ripple effect as we go into the Sunday open, and that to impact the markets as we go into the beginning of next week, as we move into a new quarter, and as we, of course, hit the new month of April. So essentially, we want to be locked in and ready for the potential of further slingshot moves higher here across the metals and energies as we go into next week. So, of course, you know we're bullish here. We've continued to add to the portfolio, taking advantage of any dips that we've seen, particularly in the last week on platinum and also palladium. We're fully stacked on gold, we're fully stacked on silver, and we are fully stacked on crude oil. Now, this, of course, comes down to utilizing and understanding a professional, research-driven approach in the market. So you can definitely ditch those outdated technical analysis strategies and gimmicky technical indicators. It's 2024, so this is where you want to be utilizing data, statistics, market intelligence to give you further edge in the market. Further compound that as well with a daily, weekly, monthly, quarterly, real-time data-driven cycle for each commodity. Align that with the intermarket correlations, the ratios in the market, the key areas of liquidity that are targeted so you can get your sniper entries in and also know the right point in the cycle to bank your windfall amount of profit. Further compound that with the macroeconomics, the fundamentals, the geopolitics, and then, of course, how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.